Welcome back to U.S. Farm Report this weekend. Arlen Suderman and Tommy Grisafi joining us. Well, Dwayne Bussey tweeted this out earlier this week. He said it feels like this was 4th of July weekend and we just got a major rain. I mean, Arlen, you talk about prices sinking and just continuing to sink. What is pressuring the corn market right now?
Well, so we look at the corn market. We've had a lot of export sales that have been canceled by China. We've had some Chinese buyers in our office here over the past couple of weeks, and they point to the cheaper Brazilian supplies and the need to diversify away from the United States where possible. So they're very actively buying that. And not only that now, because of the rapidly increasing production in Brazil, we're seeing even Mexico, our long dependent customer, has been buying 17 million metric tons a year, buying a lot of corn out of Brazil, and our customers are saying they really like that Brazil corn and they're not likely to switch back. So we're losing markets because of the ability of Brazil to expand production at a lower price.
Tommy, does the fund action have anything to do you think, with the sudden fallout in prices that we've had?
Absolutely. And the funds, I've always told people in my career is that when the funds are buying, you want to sell it to them. If you're afraid to sell it to them, protect it with them, buy the put. Now, what happens when the funds buy? The markets go up. And over the last few years, we've seen enormous fund length. Take it back to a few years ago, and Arlen could correct me. A few years ago, they let the funds get doubly long or doubly short. They increased how many futures and options they can have on. When the funds buy it, if you're not selling it and protecting it with them, you get what's happened the last 3 months. Ever since March options expired, we've done nothing but roll down, roll down. And when a market goes down, all markets, it looks cheap. I'll never forget being a trader during the NASDAQ debacle in the 2000s. Every stock looked cheap. And right now, grains look cheap. But as we've seen in this week's price action, they can get cheaper. And the CME group and all the exchanges around the world, margin calls, you don't have 10 days to mail in a check anymore. We have intraday margin calls. We have end of the day calls. We have ACHs, wires. The money's due, people. You may think the market's cheap. Fine. Send in another check for the spec long. It's hurt terribly. And the very move that funds that got us up are now getting us down.
Arlen, as Tommy sets the stage with that, are summer weather rallies still possible? And what are some realistic expectations and price targets that farmers should be thinking about from these price levels?
Well, they are possible. In fact, nearly every year, we do see some type of a weather scare sometime in May or June. One big exception is 2013. We saw a little bit of bounce that year, but that's about it. And we've been following 2013 real close. It doesn't mean we're going to continue to do so, but that's just kind of a reminder that we don't always get that. And that's why we've been emphasizing for the past several months, we need to focus on protecting equity. We need to be treating this like a business. We spent the last several years being rewarded for doing nothing. And now that's going to cost us if we continue with that mindset. We need to be focusing on the returns and the margins. And when we get those opportunities to lock those in and take advantage of that, because it's not just us selling on the Chicago market, it's Brazil as well. And I did a meeting with Brazil farmers virtually here a little over a week ago. And they were saying, hey, we are undersold. We've got a lot because we've been bullish. And after my presentation, and I explained what's happening in the fundamentals, they were scared to death. And what that means is they're going to respond just like American farmer. If you're scared, the next rally comes along, you're selling. So that means not just the U.S. farmer selling next rally, it means the Brazil farmer selling next rally, which means it takes that much bigger of a story to change the dynamics to be able to sustain some type of weather rally or something like that. And going into El Nino, that may be difficult to do.
Tommy, you'll hear some market analysts say, well, listen, use crop insurance as a tool. That is a tool, but that doesn't cover all of your bushels.
No, and I've seen a rookie mistake being out on the speaking tour. You see people say, during Commodity Classic, I gave a speech, and it's out there publicly. There's a guy in a yellow shirt I get in an argument with. He stands up and he says, the market always goes back to the crop insurance level, and that'd be 591. And I yell at the top of my lungs, always? Always? And we got in a little beef, but what he meant was most of the time. And to Arlen's point with the 2013 numbers and how much this is correlating, I think there's a whole group of people out there who would be so excited if we got back to 591. If we do, great. I'll tell you one thing, how affordable options are right now, and there's a reason they're affordable, is because volatility's come down. If you think we're going higher, you can do all types of things in the Chicago Board of Trade options market or other option markets around the world to buy back that upside. What the hardest thing is going to be able to do is the person out there watching this show that has old crop, in the next 120 days, they need to move that old crop and get ready for harvest. Harvest is 120 days away, 60, 70 days away for the folks down south. Store and ignore is no longer going to work with 8, 9, 10% interest rates on operating. Someone pops up and says, I don't have operating. Yeah, well, your local bank's offering you 5% for a 30-day note or T-bill. Back to you.
Thanks, Tommy. Thanks, Arlen. Well, we haven't even got into the grain deal. We haven't even got into the winter wheat tour in Kansas. So we'll do all of that coming up later on U.S. Farm Report. Stay with us.